TFNN.
And welcome. This is Dave White sitting in for the one and only Tom O'Brien. We'll have Andy Heck here about 20 or so after the hour. We've got lots of earnings going on, but I guess we probably just need to do a quick little roundup as we start the day. And, we had a day that kind of started off a little bit mild, got a little bit more spicy as the day went on, as Donald Trump came out, said that the big tax breaks are coming. The repatriation of money is coming, and we ended up 13 points higher in the S&P cash. That was a little over 4 points off the high, but still a decent day. Closing in on at about 3.7 billion, maybe 3.8 billion shares on the New York Consolidated Tape for the day. You really want to see in kind of above this 22 area, you're really looking for a day with about 5 or 5.5 billion shares to give you a sign of strength. We have not had that, which makes me think that we're going to play around up here for a while, and maybe we'll chew our way through it. But my guess is we're going to have to pull back and get some strength. Tomorrow, I think we are going to probably pull back. Looks to me, at least at the moment, that we're still having about, of the big movers after hours, a lot of stocks not doing much. But of the ones moving after hours, about 2/3 of them are to the downside, about 1/3 of them to the upside. Already seeing a little bit of that today. We've got a handful of stocks coming up, and that's it. I always like to start my show with a little bit of history, though, so why don't we just start with that? Oh, come on. Now something else has happened. What else can happen out here? What happened? Did I do something wrong?
That it's all just a little bit of history.
Guess I did. Fake news? No. This is real news. In 1942, on this day, Congress pushes ahead standard time for the United States by 1 hour in each time zone, imposing daylight savings times, called at the war wartime. We actually had it in the First World War, and they got rid of it, brought it back. Daylight savings time, suggested by President Roosevelt, was imposed to conserve fuel, and we trace back to World War I, when Congress imposed one standard time on the United States and to enable the country better utilize resources following the European model. Everybody said it would save money. They actually did a lot of studies on it after the war, and they found out that maybe it saved 2/10 of money for energy and fuel. It saved basically nothing. And kind of the same thing with the 70-mile-an-hour speed limit. A lot of people spent so much more time in traffic, it really never did anything. All those years of driving 55, would have been better off just driving 70. Everybody thinks they got to do something to help. It's probably a little bit better so kids don't get run over in school buses, but in actually saving any money, not so much. On this day in 1942. Of course, after the bell tonight, we've got Activision, Blizzard, CyberArk, LifeLock, Mohawk Carpets, NVIDIA, which I think may already be out. Pandora is out, and it's down, 70, 80 cents, which is close to 10%. We've got Skechers, Ubiquity Network. Yelp was down fairly strong, I saw already, so earnings are out on that. It hasn't been a good after hours except for a handful of stocks. But, Yelp down 10%. And, of course, if you're one of the decimated Nazis, those people that yell and scream when people do not use decimated correctly, that's when 1/10 goes away. Goes back to the Roman days where if they ran away from a fight, they would kill 1 out of 10 people that ran away. Decimated. You won't forget it after that. Anyway, a lot of these stocks decimated after earnings, after the bell and before the bell. About 1/3 of them doing much better, about 2/3 doing much worse. So tonight seems to be the same kind of thing. We'll go through a great deal of these here in the next few minutes as we get ready for Andy, and we'll talk a little bit of commodities with him and maybe some bigger things I wanted to talk with him about. So we'll look at it. But that's pretty much it. Let's take a quick look and see out here. I guess the big one was going to be Expedia is off 5.2. So we'll look at that. In fact, why don't we just pop up some charts and get to them right now. EXPE off $5 off the close. This thing really looked to me like it was going to come back to about this 115 area. Energy hasn't been all that exciting off this January 3rd low at 111.88. Energy's just kind of been so. No real big signs of strength. You just got back into these actual signs of weakness that go back to the 12th of December. I don't know if there's anything you can say more about it than that. A lot of discussions about how terrorism and, of course, maybe some new policies as to visas, that kind of stuff are going to move Expedia. Just before the bell, we were talking in the den, and I brought up that they're going to wall off the Eiffel Tower. So, a lot of this stuff that depends, especially Expedia, where most of their money, if you listen to their earnings calls, is made from America for overseas travel. And the rest is made on rental cars and renting rooms. Don't make that much money actually on airline tickets. But, airline price is probably going to be going down here fairly soon with some new planes coming out that are more fuel efficient. Not going to really probably affect Priceline and Expedia. It's much more about what's going on, I think, in the headline news, and that's not all that great. But let's take a quick look again on Expedia, EXPE. Yeah, well, I've got 121 out here. This has got about a 30% short interest on it, so don't look for it to rapidly move down. Every time it does move down, there's going to be a lot of people wanting to pick up some pennies being short this thing. I do think it is headed back down to this gap at 115, though, so not much going on there. We talked about Yelp getting smacked around a little bit. Let's take a look at that chart. YELP, real quick, off 10%, as we said. So that takes it to 37.40. This thing's got a big gap down here. Nice sign of strength, but about $34 is going to be the level that this thing's probably going to run to. We'll be back after this short timeout, I think, with Andy Heck.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.